You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. Trent Fleskens here, your host as always, and we've got one of our fan favourites in the studio for the first time in 6 months. He was here just after Christmas. He's here just after Christmas in July. It's Lachlan Delahunty from Performance Property, my favourite buyer's agent in WA and director of the biggest buyer's agency in WA as well these days. How you going, mate?
Really well, thanks, mate. That was a nice little plug in the introduction.
Well, you deserve it. The team's been growing and the amount of properties you're buying in this state at the moment avails us to the most data, the most insights about what is happening on the ground from a buyer's perspective. And I know that this is one of the most popular segments we have. You're one of the most popular guests we have simply because not only your insights quite relevant to the market, but also everyone's buying right now. That's what we're doing. We're buying about 1,000 properties every week, a third of the market, would you believe? 5 years ago, we were purchasing a 30th of the market each week. So clearly we are in a seller's market right now, and it would be fantastic to hear from you as we're going to go on that journey today, how the dynamic has been evolving. It certainly hasn't been changing over the last 6 months, but how it's been evolving even further into those spaces from value hunting to access hunting, and some stories, anecdotes along the way.
Yeah, definitely, mate. It has been an interesting market. You know, we go through different phases. I guess the beauty of being able to buy in other states prior to Perth, this cycle in Melbourne and Sydney, similar cycles go through similar patterns, and although it's probably unfamiliar territory for a lot of people in Perth at the moment, the patterns of a growth cycle are very similar, and it's sort of just repeating that. So it's time in the Perth market again.
It's interesting how we recognised over the last few years the early entrants to this market have been the East Coasters, not only because of the equity they've built up over the years. They have the ability to buy straight away, refinance, move equity across from one property to another, where West Australians at the same time were probably in negative equity in most of their properties in WA, but also have been conditioned that if they buy a property in the right market at the right time, they're probably going to succeed financially more so than their salary alone would have allowed them to, but also that if they hadn't, they've probably fallen behind their peers in terms of that net wealth, in terms of feeling like they're getting ahead financially. So they brought that mindset, that confidence to Western Australia. And finally, as Western Australians start to build equity in themselves, start to move through that emotion cycle that we've spoken about as well, people are really starting to get on board now. We're seeing about 35% of our market purchased by investors. And I would say that now in 2024, that's not just the East Coast investor, it's also West Australian investors. Yeah. How has your client profile evolved over the last couple of years? I know that a lot of them have initially come from the East Coast. You do sit in a national business, but has the number of Western Australian investors slowly started to increase as well?
Definitely. I think it comes down to a number of different factors, right? When you look back to, say, that 2018-19 period, right at the end of the downturn of the Perth cycle, there's a lot of factors at play. Belief's one thing. So like you said, East Coast investors had just come off a 10-year cycle of growth year after year. So they're in better equity positions, but they also believe in the market. Anyone in Perth in 2018, 2019 probably had the belief that you couldn't make money in property, and that asset class just wasn't a vehicle for wealth creation. You know, fast track to where we are now, everyone's got a very, very different view on that. But equally, the cycle feeds on itself, right? So in 2018, 2019, 11 years through stagnation, a lot of people either in neutral or negative equity. It's very hard to recycle that debt and pull that equity out to reinvest back into the market.
Even if you wanted to.
Even if you wanted to. So yes, the sentiment was low and everyone's equity position was depleted. Fast track to where we have been over the last couple of years, post that COVID bubble, prices went up between 20 and 30%. That allowed a lot of people then to, in their primary place of residence, they had bought properties and they'd increased in value, increased their equity position. And because of the positive sentiment, we're starting to see and have seen that really over the last 12 months, people using that equity to take a position in the form of an investment in the Western Australian market. So to answer that question, yes, absolutely. Our client base in particular was probably dominated by East Coast investment in the first part of the growth cycle. Over the last 2 years, we've definitely seen a shift. And in our internal client base, because we have purchased property, they have done well, some have done extremely well, recycling that equity back into the market.
Specifically the last 6 months, are you starting to see a shift?
Yeah, it's probably been running now for 12 months. We are seeing still a lot of East Coast investment because the yields and the rent returns in Perth are far greater than anywhere else in the country. And where interest rates are where they are at the moment, we are still the best place to invest in property from a capital growth point of view, but equally to be able to service the debt. So we are still seeing and competing and missing out to a lot of East Coast buyers agents because they're paying prices that we just won't pay.
Talking to that point of East Coast preference remaining in Western Australia, I assume they're also still hitting up South Australia and Brisbane as well. That's what the data is showing. But one thing you mentioned to me off air just before, which is quite startling and quite interesting to note and really combats the bias we've got in Western Australia about, and I've seen it so many times, about how Sydney and Melbourne property prices are more expensive, should be more expensive. They're better properties. It's a better place to be, and therefore properties should be more expensive. Well, what's happened to the Melbourne market in comparison to the rest of the country right now? Where is that sitting?
Look, it's about to be overtaken by Perth and Adelaide. Brisbane's already surpassed the median house price for Melbourne. So over the next 3 months, we will see Melbourne probably be the sixth most expensive city in Australia. And don't forget, it's now the biggest population centre because they've included Melbourne in the calculation. So our biggest city in Australia will be the sixth most expensive.
2 years ago it was second, wasn't it?
It was second, yeah. So obviously we're a national business. I'm very pro-Perth, probably not quite as pro-Perth as you, but we certainly are unbiased in our views in terms of where the markets are at. And as I said to you off air, on this podcast, I'll be here potentially every 6 months and we talk about the Perth market. Perth market still does represent the best opportunity in the country to invest from our point of view, from our business. But we will be the one to tell you when we think the market's overheated in Perth. And at the moment it's not. And when we look at Melbourne specifically, it still does have some headwinds. Obviously the land tax reform in Melbourne, negative interstate migration.
I think it seems like a negative feel on the ground in general about being in Melbourne as well.
Well, COVID didn't help, right? And what happened there, and we won't get political about it, but they've got a huge debt. The way to get that cash back is increased taxes, and land tax has been a huge part of that, which is pushing a lot of the investment out of Melbourne. But fundamentally, Melbourne still is the biggest population centre in Australia. It gets second most international in migration into the country. So the long-term view on Melbourne is still really, really strong. And albeit I don't think the time is absolutely now because there is still a lot of headwinds, Melbourne is starting to represent value. And over the next 12 to 18 months, we could potentially take a position in that market and quite a strong position if that affordability play starts to improve. And for that to take place, we do need to see further price downturn in the market, which we're seeing on the ground in Melbourne at the moment.
Okay, so it's mainly price comparable to other states, and you're looking at it from that top line level rather than what's going on the ground with regards to just demand and supply itself.
Fundamentally across Australia, there's an undersupply in the market, which is really probably why these markets haven't fallen as much as they could have. But from an affordability point of view, when we look at the affordability index, so looking at local wages consumed by local mortgages, Melbourne is still trading above 50%. Perth at the moment is only at 38%, the most affordable capital city in Australia still.
So still unaffordable.
Yeah, Melbourne, fundamentally, half of your income is going to your mortgage. It puts a lot of stress on everything else. So from that point of view, we still need prices to correct, and they are, and probably not as aggressively as we would have expected because of the lack of supply. A lot of builders have gone bust. Materials post-COVID, it hasn't been, that supply issue is going to continue to compound. So
bit of stagnation maybe in Melbourne right now.
Yeah, stagnation and prices and the sentiment's low and prices are gradually falling. So it's one we'll probably continue to talk about on the podcast as I check in to give you an update on that market, because I think that could be the next capital city after Perth. But looking at the data, like I said, Perth still remains the most affordable. The supply and demand imbalance has never been greater, right? And so that's when I get asked a lot, is the market overheated? Should we still be considering? Because some of the data, and we'll go through some of the sales, yes, there is some big numbers. There's records being broken. Not in all suburbs. There's still a lot of opportunities out there, and there's still some undervalued suburbs, in my opinion. But when you've got, in the last 12 months, over 80,000 people migrate into WA, what were building approvals, I think with 12,500 building approvals in the last 12 months, which take 2 years to come out of the ground. You don't have to be a mathematician to understand that the imbalance is significant, and that's not going away. When you look at building approvals, it gives us 12 months to 18 months view into the future in terms of what stock's going to be coming onto the market. And at the moment, we're just not approving enough properties, and you can speak to that.
That's right, and I think that's one question that as we continue to rise in value in Western Australia, people get a bit more nervous, and it is nearly a fabled conversation. It's nearly a standard conversation to say, well, we've had a couple of years cycle, what do you think's left? Oh, a year, or a year and a half. Why is that? And most people don't actually have an answer for that. They hark back to historical norms and suggest, well, last time there was a run for a couple of years, so this time it's probably going to be the same as well. But that doesn't actually speak to the facts as to the conditions required for prices to go up, or in this case, the question to go down. When do they go down? Well, the question should be, how do they go down? And prices in any asset only go down when supply is able to meet demand and in fact exceed demand. Now, for us to do that, we know that people a year are coming into Perth. They need about 30,000 homes. And that's not to mention the natural increase of people just moving out of home, trying to get out of the rental market. So every year for the last few years, we've been in deficit. And what's been happening is it's pushed the amount of people into a Big Bang Theory Friends situation where we're in New York and people are housemates again. 5 years ago, no one was housemates. Very few people, right? So shared accommodation, multiple occupancy situations becomes a reality now. We're renting rooms rather than apartments. That's how people are surviving and finding shelter right now. That becomes the norm for a few years, obviously, until it starts to settle down. But how do we actually solve this supply problem? Well, let's suggest we need 30,000 homes a year and we're only providing 15,000. Last year it was actually 16,000 homes were provided. How do we bridge that gap? Well, there is really no capacity in the land development market to provide more supply than they are at the moment. They're hitting their capacity from a supply point of view in terms of labour and civil contractors, but also just from a planning point of view. We're running out of approvable, titleable land parcels in Western Australia. That's going to hit a cliff in the next couple of years, and most people in industry are quite concerned about that. Then we start to talk about, well, okay, house and land isn't the only place to increase supply. We also talk about infill. Let's talk about apartments. We know that small-scale infill is rounding numbers. Maybe it's 1 or 2% a year of supply. That's not changing the dial. It's apartments that has to be the answer. Well, apartments don't come on until we have enough people who see the compromise into an apartment, which is how our culture views it in Perth, being a logical thing to do. And that must be price, the price compromise relationship. So if we were to move into a 2x2, buy a 2x2, instigate the purchase of a new 2x2 off the plan, and we know that it needs to be at about a price of $800,000-900,000 across the board for that to actually get up, given costs to do that, then what that means is the alternative market, the established market for a 3x2 needs to be at $1 million, really, somewhere where you would make a compromise down and see value for an apartment off the plan.
Correct.
So we're still a while away from getting to that point in the established market, in the detached market as well. And then you start to think, okay, well, at some point in time in the future, the instigation of new supply from apartments, which is our lever here, the only lever this state will be able to pull to get to the 25,000-30,000 houses a year we at least need, that is still years away, because the established market needs to get to a price point we haven't even imagined yet, which gets close to Sydney's prices to meet our cost structure. And then
to make it viable for apartments.
That's right. And then we need to build them.
Yep.
So we're talking a good couple of years, plus a good couple of years.
Approval time,
yeah,
construction time.
To the point where that supply actually is created and people can move into it. Okay, and then maybe that year, supply meets demand. Maybe that year is 2027, 2028, that we actually can get to that point as an industry to solve this problem, it looks like. Well, what about the years of deficit we've been creating in the meantime? That still needs to work itself out. And then we actually start to talk about, well, that year, whatever year it is.
Do we enter an oversupply at that point after that? Yeah.
Yeah, then do we start overshooting? And how long does it take for the market to realise that and adjust that?
Yeah. And that's
in my opinion, we're talking about most of this decade, Lachlan. I know you might not be as bullish about that as me, but that's how I work through. And for the listenership, I know it's been a 5-minute explanation.
Quite passionate about this.
Yes. That's how I work through, well, what's the answer to when does the prices start coming down?
There's a lot to unpack in that little segment there, which I'll try to do so. But I do agree, like there's a massive undersupply and has been for a huge period of time. So there is a deficit in the market. I don't try to get too crystal ball in terms of look too far ahead from a 3, 4, 5, 6 year point of view, but at the fundamentals for the next 2 years look really, really strong. We're still going to be in undersupply in 2025 and 2026, so I don't disagree with that. When you're trying to unpack your first part of that conversation around people's sentiment today, right, when they go to start looking today, they feel like they've missed the market, like you said at the start. It's hard to look at the sales results, like I said to you off air, and there was one in Cunningham Place in Padbury that we missed out just a few weeks ago that sold for $579 in July 2018 and just sold for $1.183 million.
So it's doubled in 6 years.
104% increase in 6 years. So people look at that when they go to the market, and it's easy for us, sit at the pub and say, geez, the market's overheated. And people naturally want to find reasons not to buy property, right? People always will find excuses. In 2018, you can't make money in property because the Perth market hasn't done anything. Same sentiment was taken in 2019.
COVID.
2020 was COVID. Don't buy. The world's going to fall apart.
Yeah.
That sort of ran for another 12, 18 months. 2022, 2023, interest rates were going up every month. Okay, we're not going to be able to afford it. People are going to go bust. They're not going to be able to repay their mortgages. There's going to be a lot of stock come on the market because people can't afford it. None of these events really take place.
And I remember conversations at that point in time, especially even among friends of mine, where I could have bought that for 900 grand. It's 1.2 now. I'm going to wait until it drops a bit.
Yeah, I'm going to wait till the market cools.
And that's now 1.4, 1.5.
Yeah, and I'm having conversations daily with people saying that the market's overheated. But let's go back, and you said it well at the start in terms of look at history, right? It doesn't tell us exactly what can take place, but it gives us an idea of what has taken place. And if we look at Perth, and I can't present to the audience the data set of what Perth's done over the last 40 years, but there's 3 distinct growth phases and 3 distinct stagnation periods. But the growth periods was from about 90 to 1994. Property prices went up by 200% in a 4-year period. So very distinct, very sharp increases. Fast track to 2000 to 2006, 2007, prices went up by 210% over a 6 to 7 year period. And then we fast track to where we are now in 2024, and prices are up somewhere between 35 and 40%. There is extreme examples. There is outliers. There's markets that have gone well north of that, particularly in markets that we took strong positions in 2018 to 2021.
Some that are close to doubling by now.
Correct.
We just saw
Pabry,
this particular one in Pabry.
Yeah. So there's extreme, but overall, the market is up somewhere between 35 and 40%, which is a long way from 200%, right? We're talking about a tripling event, and we're not there. And I'm not here saying that's what the market's going to do. But looking back, it's really dangerous, and this is what we had clients when we were buying in Sydney, is it's really dangerous to look back on what things are sold for, because you're going to go into these offer situations, you're going to go to these home opens going in with a really biased view on where the market's at, and that's not going to help your cause. It's going to give you some recency bias, it's going to give you some hesitation, and in this market you can't have either of those things because you're going to miss out.
Let's talk about that dynamic, the emotions, the practicality of being on the ground, because I know a lot of people listening to this podcast, they're going to home opens every week. They're experiencing this. We're telling them things that they know, that they are seeing on the ground, that the feeling of desperation, of disappointment, of frustration. They sit here and go, well, Trent and Lockie, I have adjusted my price expectations for what I'm going to pay. I have gone and offered over what the agent's telling we should be offering, even though there's no price listed on realestate.com. We have gone and gotten pre-approval. We have offered cash, and we're still missing out every week. We're sitting here in our 3x1 with 2 kids, and we want to upgrade to the family home, and nothing's coming out that we like. And the one time it does a month, there's 50 people at the door, and it feels like someone's always getting stitched up. What would you say to people who are in that position right now?
Look, it's extremely difficult, and I don't want to paint it out to be this magical thing. It's stressful, it's difficult.
That's the reality, isn't it?
It is. And we've given tips on previous podcasts on how to navigate that. That is getting harder, even for our buyers agents, right? We've got 13 buyers agents on the ground. As a team, we inspect between 40, 50 properties a week. And if they're on market, our conversion rates on market now are less than 5%. So it's a real numbers game for us as well.
That's a lot of work.
It is.
1 in 20. You're not just talking to your wife and going, hey, we should get this one. You're writing reports, justifying to your clients.
Yeah, doing valuations, due
quickly,
diligence reports.
because obviously these things have to happen quickly.
Yeah.
Explaining to the client, this is the one we're going to get. We're going to go for it.
We might miss out.
And that happens 20 times. And then
exactly.
the 20th time you get that property.
Yeah, so that's why our market isn't working for us as well as it historically has. In June, we had our biggest month as a business. We did 37 properties. Of those, 27 were off market. And that's also hard work, right? That's 7 years of relationships, trying to nurture those relationships with agents. It's working out different ways we can buy property. And that's why we'll continue to target that space, because constantly we are going to the market like every punter out there, and we're getting beaten, and we do this every day. But there's prices that we just won't pay in that off-market environment. It gets very difficult to try to coordinate a deal. So for us and our energy and efforts, we are always targeting that off-market space where there isn't that vast amount of competition. But that's not easy, and it's hard to, as a first-time buyer, second-time buyer that hasn't been in the market doing this for 6 or 7 years, that really isn't an option for a lot of people.
Of the 37 properties that your team bought last month, can you characterise the segments of them,
Yep.
maybe where they were and what type of property and what type of buyers?
Yeah, so there's 2 parts of our business, as we're made aware. We've got a home buying business, which is typically $1.5 to $10 million properties, and that's a home buying experience, very, very much
Tailored.
around emotion. Yeah, it's like you want to buy something in Swanbourne, you want to buy something in Leederville, West Leederville. We've got area specials for that, 6 in that team. So there was some big purchases in there, one in Swanbourne, another in Floreat, and all that space typically operates in the off-market space. When we look at the investment space, we've had to change suburbs. We took a really strong position in the Northern Corridor, particularly in Duncraig and Padbury, and as you can see that Padbury example before.
City of Joondalup.
Yeah, really, it did. It was something we saw 2 to 3 years ago as a real opportunity and probably undervalued. Like we're buying in Kingsley 3x1s for $600,000, right? They're all trading now for $850 to $900. So we're now getting pushed out of those markets. Where we are seeing opportunities, I've been advised strictly from my team to not share too much like I did last time because we make it more competitive in the markets that we want to buy in. But we're really seeing an opportunity for assets that are raw, haven't had the work done. I still think the market recognises there's a big divide between finished product and unfinished product. Even that Padbury example before, albeit a 3x1, it was a spec renovation. They hadn't done anything since the sale, but they bought it as a finished product. So I think 2024, people still have a fear around what things cost to do, turnaround times, and people want things now. So I don't think people will roll up the sleeves as much as they once would to do the work. So we're naturally gravitating towards an unfinished product where we can sort of add our own value as well. In areas which are less competitive, we're sort of getting priced out of that Northern Corridor, as I explained.
There's a number of people that I've seen over the last couple of years who have really been the DIY buyer.
Yep.
Have thought, I don't need a buyer's agent. I'm out there every weekend. I've got time. I keep missing out. But it's interesting that a good percentage of these have actually started to make that decision to go to a buyer's agent over the last couple of months. And so the 99th percentile, even they are starting to make that call that this is just ridiculous. I need access. And I think that's something that the role of the buyer's agent has evolved into in Perth. Obviously, it's a role that in the East Coast has really been the main value add for years in Sydney and Melbourne markets over those hot times, especially before COVID. But in Perth, I think most Perth people would have been hesitant to get into bed with a buyer's agent back in the day because they thought, well, it's easy enough. I can buy my own property. Yep. How hard is it? And for many years, that was the case. Unless you were looking for a specific property, let's say it's a development block that you needed real work done on understanding the planning side and all that to buy it. Most people, I think, didn't find a lot of value in a buyer's agent, and the ones that did got a lot of value out of them because the buyer's agents were really dictating terms. Buyers were dictating terms. Yep. And by an extension, buyer's agents were too. So the sell from a buyer's agent is, well, you pay us a couple of percent, we'll save you a lot more than that just on our ability to negotiate stuff off market. That has evolved over the last few years.
Yeah, definitely.
Where the relationship, because obviously with a selling agents and just homeowners off market, cannot be as robust from a buyer's agent's perspective, or because the buyer's perspective, we're not seeking financial value as much as a buyer's agent these days. It's not a reality. The reality is access, isn't it? Yep. And that access can be translated into value, because if we're talking about saving 6 months, a year, well, we're actually opportunity cost saving 20% here. Yeah,
2% a month, the market's going up. So I agree. It's access and it's knowledge. I said to you off air before, putting a deal together now is the hardest it's ever been. Even if you've got the deepest pockets and the top budget. We bought a property recently, 3 weeks ago, property for 1.3. Our offer, we paid 133. There was a higher offer at 136, and this is on market terms, and we purchased the property and $30,000 less than the highest offer. And people are like, why would that happen? Because it's not always about the deepest pockets. Often it is, but there's always so many different things in a deal, right? We're talking different terms, we're talking different seller dynamics, and that's our job, is putting deals together, having the knowledge, having the relationship, and having the access. And most punters will go out there and compete on the same properties as us. I promise you we'll buy it over them, and arguably at a better price, potentially better terms. And you may say that's impossible, and we're seeing in reality all the time. And it's just understanding all the balls in the air in any deal. There's so many different equations, and every negotiation is very, very different. We are in a selling market. The dynamic has changed.
You're accepting terms. You're not dictating them anymore.
Absolutely. We want to be seen to be good to work with. We're not going to try to flex in situations where we don't need to flex. Some of these agents now are our best friends, and in a world where it's difficult, and typically in the agency space, not everyone likes to collaborate together. So we're just trying to do the best thing for our clients. The seller's always trying to do the best thing for their client, but if we can do it in a way that's mutually beneficial in the sense the outcome, the experience is a good one, that's why we probably get access to these sort of properties.
Well, I think for a selling agent, the sell to them from a good buyer's agent is confidence that the deal happens, confidence that it happens smoothly, respectfully, When you think about the desperation in the market right now, the amount of people I think that are overstretching themselves, putting offers down that they maybe actually can't afford, that's risky for a selling agent when they're thinking about the amount of work they have to do to filter all of the inquiries that are going on right now. 5 years ago, a selling agent would have to work to get people into the door. Yep. Now, the amount of money spent on cleaners is material, because from the amount of footsteps going through the house, the phone calls, it doesn't stop. You have one listing in a good area, you would have hundreds of calls. You would have 50 to 100 visitors through that first home open. You've got to process all that, give everyone fair opportunity. But one thing you do know when you're working with a good buyer's agent as a selling agent is that when they bring a deal to you, it is a deal.
It's been qualified.
They ain't wasting their time.
Oh, we've got to uphold our reputation as well. So we don't, we don't take on clients, unless they're in a position to do so. We've never defaulted on a pre-approval. We've never been late to settlement. So that respect in the market is well valued. Because like you said, at the moment, people are really pushing themselves to the nth degree, and they're going in on terms they probably, they're going on cash offers when they probably shouldn't be. So the default rate is creeping up, and that causes a problem. And the selling agent has got to deliver a really good experience to the seller or the vendor. And if you've got buyers that aren't qualified and are stretching their limits, that can end for a bit of a disastrous settlement process, really.
The segments around Perth have been quite patchy, I've found, over the last couple of years. It's probably smoothed out a little bit in the last few months, where we were having a chat with Rash Danjau over lunch a couple of days ago, and the reality seems to be that whilst the cheaper affordability zone that Brendan Ptolemy would speak about has really been coming to the fore over the last couple of years, as everything is just compressed up. Places like the city of Kwinana, city of Armidale, city of Mandurah have, for the most part, doubled in value over the last 3 to 4 years. It's starting again to filter through to the other price points. I think we're probably thinking as a market we're not that far away, probably further than we initially thought, but we're not that far away from interest rates starting to come down. We've seen the US market start to price in interest rate drops over the rest of this year. The European Central Bank has had a drop in June. It's coming, and I think people are nearly thinking we're nearly at the end of this. Maybe in those $1 to $2 million marks, we can start putting some offers down, weather the next few months, get ourselves in before it gets crazy again. People, I think, are anticipating the rate drop at some point. And in the East Coast, where that's nearly putting Melbourne out of life support, in Perth, that's throwing kerosene on the fire next year.
Definitely. Inflation's been a little bit more stubborn, though, than we hoped. So, I won't try to forecast where the next rate will rise or cut will be or
it's
go.
It's folly to do that, isn't it?
It is. You're right, though. The sentiment over the next 12 to 18 months would suggest that, based on what international markets are doing, that there will be some cutting. And that will fuel that top end of the market. And that's probably been the market that hasn't performed. If you're buying in the likes of Swanbourne, Floriat, you'd have a completely different view, because those markets, we just had a client that we purchased quite an original 4x1 for 18 months ago for 2.2, just sell for 2.9. So those markets are still performing, but certainly not at the same rate from a percentage point as that lower end investment market. But you're right, the markets that do perform, the correlation between the cost of money and the higher end product, such as the western suburbs, is a strong correlation. We've seen that in COVID, and I think we will see that again over the next 2 years. I think that'll be the market that will really start to kick. And typically at the back end of cycles, if you go through historical cycles in all markets, they're typically the first to go and then the last to go. And that's what's taken place in terms of the early part of this cycle. And I think that's what will cap off the Perth cycle when that market really goes to another level. So watch that space. Over the next 2 years, I think we'll see the western suburbs go through another surge in activity.
Now, I know you don't buy in the house and land suburbs.
It's not our space, no.
It's not your space. I don't think you buy much land.
No.
But one reality we are seeing the stats come through, and I'm seeing it just on price rises in some of the assets that we're developing, is some significant increases in land square metre rates as people start to lose hope in buying in the established market. Have you seen any of that? Had any conversations with people where they might have been sitting on the sidelines, even been clients of yours that just haven't pulled the trigger on things that you've presented to them, who have tap out and moved to building their own home?
There is a little bit. Still, the people in 2024 want things instantaneously, so we haven't seen it in droves in terms of the build time, the build cost. But build costs, you can speak to this, seem to have stabilised, which gives you some more confidence in that space.
Confidence in the market.
Yeah.
I mean, land purchases have doubled over the last year.
Yep. So that would suggest that there's definitely some confidence. Obviously, it's not a space that we play in, but inevitably people need somewhere to live. So naturally, when established prices get to the point where people can't justify it, or they just fundamentally can't afford it, they're going to have to go in other segments of the market. And that's what we're seeing in the house and land space, equally as what we're seeing in the unit space. Starting to see a rise for the first time in a long period of time that units and apartments are starting to appreciate in value.
That's an interesting one I want to talk to quick. I was on a panel with UDIA a couple of weeks ago, and Anne Flaherty, economist from REA Group, spoke to the changing preference in room numbers in houses. We've historically been a state that's been addicted to the 4x2, but the stats are showing, either through preference itself or through being forced to, that the search fields at realestate.com are actually starting to pitch towards the 2-bedroom space and the 3-bedroom space versus the 4-bedroom space. Obviously, as the family unit has evolved over time, but I also think simply on affordability, people aren't even bothering the 4-bedroom in the same way they used to. Are you seeing that in your buyer profile? More people going, I'm calling a 2-bedder?
Yeah, and that's why we took a position in, particularly 3-bedders and 1-bathrooms, because we say those villa assets or half blocks, or your duplex pair, say in a double view by the front half, those 3x1s that you can quite comfortably convert into a 3x2 with adding an ensuite, removing the laundry, was a strategy that we sort of implemented 12 months to 18 months ago. And we have seen a lot of buyers now start to gravitate to that. That's gone to the next level of looking at 2x1s. It's an affordability thing, right? And people don't have the family sizes they once did. They don't need the 4 bedrooms, particularly young couples and or downsizers. 2 bedrooms is enough.
Yeah, well, I think that is a good point. We're about to tick over in the next couple of years in Western Australia, having more people over 65 for the first time ever than people under 18. And when you think about that family unit, well, it's 1 or 2 people. So, of course, the profile of people who need shelter is going to start shifting to less bedrooms.
Correct. And
cash out on the 4x2, put that into the bank, buy yourself a 2-bedder apartment or villa, live off the proceeds from your 4-bedroom house you've moved out of.
Exactly. And we're seeing that take place. Problem is, there's no stock.
No.
So there's a lot of people sitting in these large estates or large homes wanting a solution, but there is very little out there. And a lot of our clients that come through, a lot of our inquiries are coming from those sort of downsizers that need some assistance.
Yeah. Lockie, I think we'll just have some final words on where you think the rest of the year is going to be playing out on, and the dynamic we're going to continue to see, and the advice you're providing to your staff right now about how to go about a negotiation.
Yeah, look, if I see how the year's going to play out, I think it'll be very similar to what we've seen over the last 6 months. Over the last 12 months, we had 25% growth in a 12-month period. I don't see the market slowing down for the remaining 6 months. What I will say is, what you touched on before, if interest rates do come down, we are going to see an absolute frenzy. You think the market is hot now, you think it can't get any hotter. I've been in markets where it's been much hotter than this, and we've seen far greater significant growth over a shorter period of time. So for those who are sort of waiting and trying to wait for that period of stagnation or a drop in the market, I wouldn't be waiting on the Perth market to slow down.
It's not coming anytime soon.
I can't see it. If anything, if there's one drop in interest rate rises, we're going to see this market go to another level. And I think people will look back and think, we should have taken a position back in 2024. Like people said, we should have taken a position back in 2020, because the market at the moment still does represent value. And we're in a very high interest rate environment at the moment. So the cost of money comes down, people have more access to it, typically they spend it. It's just naturally going to increase and put more fire under what is already a hot market. So that's what I'll say to where the market is and where it's going. In terms of some advice and what I'm giving to the team at the moment, knowledge is so much power. And when I say we can put deals together, the reason we can do that is because we've got so much access to knowledge, right? What most people see is what's under contract or what's sold on realestate.com, which is typically 30 to 60 days
at least
delayed, at best case. Often 3 to 4 months. If you're using data that's 3 to 4 months old, if you're using data that's even 30 to 45 days old, you're out of the market. Fortunately, we're across lots of markets, particularly in the area that we're specialising in terms of where we see value in the market at the moment. There's still some opportunities out there that we like from a suburb point of view. In those areas, we know what sold yesterday. We know what went under offer on Tuesday, and that information becomes extremely valuable going into the next negotiation, because if we're the only one around that table with that information, that means we can pay a price knowing what that's sold for, because that is what market value is.
So that might be a little bit of advice to guys on the street, punters. Have those conversations with sales agents, see what data you can get out of them.
Try to, absolutely. I think knowledge is power, and that's going to give you more access to an understanding and more of a buyer's advantage, because you'll know what true market value is. Otherwise, you're shooting in the dark. You're never going to get in because you're using data that's too old. So that would be my advice.
Chin up as well.
Chin up. It is still a huge financial decision. It's a big decision. You want that to be an enjoyable decision. We were working on some new taglines for our business, and one of them is to try to bring the joy back to buying again, because I feel like everyone's quite miserable in trying to buy a property at the moment, and that's sad for me, right? So really, it should be quite exhausted, miserable.
Eventually, you get that property, and you're thinking, "Let's celebrate a bottle of wine," and they're like,
"Just like how hard was that?
We've got somewhere, mate. Thanks a lot."
So I just encourage you, if you are struggling, obviously do reach out, speak to people, educate yourself. There is certainly tactics and advice that we can help with, whether you use this or not. We want people to make the home buying process and all the investment process as enjoyable as possible, because it should be a positive experience. And I feel particularly over the last 6 months, just speaking to friends, and obviously you go and have a beer with a mate or something, and it's like, geez, it's hard work.
Yeah.
This is
frustrating.
Their life. Yeah, and then relationships get tested and all that sort of stuff, and that's not good, right? We want people to have good experiences and celebrate buying a property.
I think that's a really good way to finish, Lach, is keep your chin up, have hope, use the people around you, use the resources around you as best you can to move to that next chapter in your life, whether that's your first investment, your upsize, your downsize. The funny thing about this investment decision is it usually affects the day-to-day of your life, and that's why we take it so seriously. That's why we have this podcast. So thanks for coming in, mate. Thanks for giving your time again. Fantastic segment on where things are at today in Western Australia. It might sound jaw-dropping to some people who haven't listened to it for a while, but I would suggest listen back over the last few episodes we've had with Lachlan, and it would be pretty obvious, I think, that most of this advice is turning out to be very accurate. So thanks for your time, mate.
No worries, mate. Definitely go back and have a listen to our first podcast. I think that will give you some good insights that we've got an unbiased view, and I think those podcasts probably testify to that.
Thank you, mate.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!